Hello and welcome to the Australian Stock Market Report. I'm Dale Gillham, the Chief Analyst here at Wealth Within, and welcome to part 3 of our Best of the Australian Stock Market Report that we've been doing the last couple of weeks. Hope you had a fantastic New Year's Eve and your head wasn't too sore, but I really do hope you're actually going to sitting down and actually starting to write down some of those goals, getting into your budgeting, making sure your financial management is, because I do think the Australian market is looking fantastic for 2021. I'm not really worried about it at all. I think there's going to be some great opportunities in multiple different areas. Now, again, today we're going to bring you the best of some of the best questions that you've asked us. And again, Janine and I love answering questions from you. So if you do have a burning question or something, you just go, I wonder what happens here or what this is, just put it down below. We're really happy to answer those questions for you. We do have a big show for you today because the second half of those top 20 stocks that Janine and I are going to go through, we will be doing that today, so stay tuned for that. But for now, let's get into your first questions. Well, the first question we have today is from Adam, who says, hi, Janine and Dale. What I'd like to know is if you decide to sell your position, should you always sell your entire position, or is there ever a time where you would take profit and continue to hold a portion? I'm also wanting to complete your diploma in the new year. Is there a face-to-face version of your course offered in Sydney, or is it the course only offered by correspondence? Regards, Adam. Well, obviously there's two questions there, mate. First one is yes is the answer, but to explain it would take a lot of knowledge of technical analysis. Sometimes, depending on what we're trading, if you're trading things like highly leveraged products like FX or contracts for different those sorts of things, and you are highly leveraged, then there is a way to take profits from the market. The goal is to get your capital off the market as quick as possible. So you do that based on knowledge of strength and direction. So there are times you do that when you're looking at leverage trading. Generally, if you're trading for cash, the answer is no, and that's, I'm saying generally, not all of the time. If you are in good profits, I know some people have said to me, I want to sell down some of my position here because I'm overweight in X stock, and my thinking of being overweight in X stock is one of these fallacies that we're pushed into believing by the big end of town. So I necessarily don't suggest that. If you've got a stock, and unless you put a massive percentage of your total capital into one stock, that to me is a sin of being overweight in one stock. For example, if you have $10,000 and you put 9,000 of that in one stock, that to me is an overweight. If you balance it out and have 10 positions of $1,000, and then one of those $1,000 positions, rises 500 or 600% to become 40% of your total portfolio. Let's say some of the others don't do much, then that's not overweight to me. You're in profit for that $1,000. You're doing really, really well. So stay with that. Don't downsell some of that or take part profits of that. That's what I'm suggesting here. So, but it does take a little bit of technical analysis skills to understand where and what to do. So you'll learn that when you do the diploma. Sorry about that. When you do the diploma next year. We've never taught the diploma face-to-face. It's just not possible for a course the size of it is and what we actually do. It is what we call a flipped classroom course. It's very much, you get your face-to-face for all the videos, all the multimedia. We do live online seminars. We've been doing those for 16, 17 years. But you also get your one-on-one support with our team of traders who will work with you all the way through the course. So you'll deal one-on-one with that. There's a lot of work and effort, I suppose, to put into it to go through it nice and slowly. Face-to-face learning is actually, I've had a lot of people say to me, I only want to learn face-to-face because that's the way I learn. And when I ask them, have you ever learned any other way? They generally say no. And I said, well, try the course. And there's never been a person that's tried it, got onto the course, that haven't really loved what we did in terms of how we delivered it, the support you got, etc., etc. But the team can talk to you about that. I don't want to sort of drag on that question, but the team can talk to you about how it all works for you. Give the guys a ring, and if you want to enrol next year, then that's fine. Just get all your answers now. But the next question we do have is from Jeremy, who says, hi Dale, how are you able to comment on Westpac Bank? By looking at the trends, I believe it's just trending sideways a lot, similar to all the other banks. Westpac has also been fined significantly by Austrac due to their involvement with money laundering this year, which may have impacted their profit margins. Many thanks, Jeremy. I think every single bank's been fined, every single bank's had ASIC orders against them, every single bank's had all sorts of different things. It's just normal at this point in time. Well, not this point in time. We've had the whole Royal Commission, etc., into the financial services industry, and the banks have been heavily involved in all of that sort of stuff. So all of that, again, doesn't necessarily make... it will affect their bottom line, but they have contingencies and they expect that, because some of those cases go on for not just months but years. So they'll be putting money away for those sorts of things for expected fines, because they'll know that they've done things wrong, and so they would expect the fine, and they would know roughly in the order what that fine would be, because they would be talking with ASIC and saying, what's the likely outcome, so they can plan for that, because they don't want big hits. But let's go and have a look at the chart. I'll put my glasses on. And looking at Westpac, just bring that up right now, you can see how it, like all the other banks, all the big four banks have been bearish since March, April 2015. All of them. So they've all gone right down. But since March of this year, all of them have done pretty much similar type of things. They've moved up a little bit and then a bit sideways. So that's really what you're talking about right here. And they have been a bit sideways. They are struggling against the low interest rates at the moment, and not a lot of borrowing had been going on in the banks. Simply because with COVID, less people are moving houses, a lot of less loans going on. And obviously lower interest rates makes it harder for them to make some money from there. But right now I see Westpac's not giving me that much excitement. Of all the big four banks, I like Commonwealth Bank better. But Westpac and CommBank are the two best banks for performance over long periods of time. When you're looking at 10 years plus, Westpac and CommBank tend to be the best ones. Of the big four, Macquarie Bank outstrips both of those in terms of overall growth, and I do like Macquarie Bank at the moment. But at this point in time, if Westpac moves through that sort of $19 area there, right above that sort of area there, I'd be quite happy to buy that stock. I think it'd be a very, very nice stock to get into. I used to work for Westpac, so that I'm not putting my bias on that one, but I used to work for them for about 8 years back in my younger days. But I think right now it's just setting itself up for a nice rise, and I think in the next year or so the banks will do a hell of a lot better than they have done over the last 5 years, because they are really due to now start making a run after having pretty much 5 years of falling away. And having banks, our big four banks, falling for 5 years is not something we're normally used to. But great question, thank you. We also have questions for another question from Jash, who says, "Hi Dale, interested in your thoughts on inverse ETFs such as Bear. Given the market looks likely to head into a low in the not too distant future. Love your work." Thank you, mate. Really appreciate it. Bear, I've been watching Bear for a while, and Bear is an inverse ETF, and basically it's an ETF that shorts the market, I suppose the easiest way for me to say it. But as the market is rising, which you can see there on the left, the Bear is falling away. So if the market's falling, the Bear ETF will rise, and you can see here that's the move up out of the March low. So you can see there on that move, but it moved up. But I'll go into here. Now, what I'm looking at, it is looking better right through here because the market is slowly falling away. But you've got to look at where you make money, how do you get in and how do you get out. And more importantly, you don't hold this ETF very, very long. And that's what one of the things I'll suggest to you. See, this we go 1, 2, 3, 4, 5 weeks up, and then you would have exited, because since then it's fallen away. But if I use my little tool here and go to that low there on the 21st of February, that's 56%. It rose that very, very quickly. And since then, it's fallen down to these lows, down 33%. So you would have lost most of your return if you didn't exit. So that's one of the considerations when you're looking at an inverse ETF like this with Bear. And all the other bear market ETFs would be exactly the same. You need to get in and get out of it and take your money. But what you need to look at as well is also overlay the All Ordinaries Index and look at that. So the All Ordinaries Index, because this is based on the All Ordinaries Index or the S&P 200, I would think it probably is from memory. What did that move? That moved 38%, I think it was, 38%. So this moved a bit faster, a little bit faster. So if the market won't move 38% this time over the next few weeks. So you're not going to get that big fast run. So if the market does move, what I was talking about a little bit earlier, let's say the market moves into a low, and let's say it moves 20% from that low. or it falls 20% from that low, which is more than what I would expect it to fall, but let's put that on 20%. From its current price, if we put that on, this is if you do enter into this, you need to look at, well, there's a 14 or 15% move to get to 20%. More than likely our market's probably only going to do about 14 or 15% move roughly, or at best down into the low. So therefore now you're shrinking your profits down to under 10%. So don't think, my thinking is unless we get some different news coming out of that volatility, something that causes a lot more volatility, which is what I was saying a little bit earlier, if we maybe get, several outbreaks of coronavirus or something happens to see the market become really volatile like this, I don't see a big move here in the bear ETF. You may get 10% out of it, you may get more out of it. But again, you need to look at the correlation that it has to the market and whether it's one for one. If the dollar rises 1%, if the Australian market rises 1%, does the bear ETF fall 1%, and inversely the other way? There's going to be some sort of factoring. It could be 1.2 or 1.25 or 1.5, because obviously people buying a bear ETF are hoping the market does fall fast to really grab that kind of return like we saw there, that 50% return. So just be careful, do a little bit of research and have a look at it, but you don't have a lot of history to really study it properly, but really good thinking, and I applaud you. We had some great questions, and I said, I'm sorry if I'm being a little bit hard on some people, but I don't like people making decisions based on a lack of knowledge, thinking they're doing better for themselves, and I'd rather be honest with people rather than give them a whole lot of fluff that doesn't really help them. Trading the market is serious. It's your money, and you are responsible for it. If you want to throw it away and guess at the market, then that's your choice, but don't expect me to sort of support that, if that makes sense, of you making what I would deem poor decisions. But anyway, all right, I hope you're enjoying those questions and really getting a lot out of them. As I said, we do find that people learn a lot from everybody else, or us, or Janine and I, actually answering people's questions, and people come back to us all the time saying, wow, I learned so much when listening to your shows, whether it's your live show or this Australian stock market report. And really do thank you very much for your support in 2020. But now's the time for Janine and I to get into those last 10 stocks in the top 20 to give you more stocks to stick on your watch list for 2021. So let's take that away. Well, welcome back to our take on the top 20 stocks on the Australian market, part 2. Last week, or our last episode, we actually went through the top 10 stocks by alphabetical order, so we're going to start today on the second 10. But last week was a really good one, wasn't it?
It was, and I've really been waiting for this lot as well, because there's some of my favourite ones. And I jumped the gun, didn't I?
I think half of the last 10 were your favourites. Now the next ones are your favourites.
Look, you've always said, if you stick with the top 20 stocks on the market, you can't go wrong, can you?
Well, that's what I think. Yeah, correct, absolutely. And I think people, they make comments about saying, well, hey, the top 10 or top 20, they're too slow. But, when you look at some of those stocks, they're not that slow after all, are they? Yeah, but it's also about consistency.
They're such great stocks, some of these shares. You've got to be, how can you go past a stock like Macquarie, for example? It's a really good company, isn't it?
Okay, so do you want to look at Macquarie now?
Yeah, let's talk about it.
Nice little segue into Macquarie. So that's the first stock
I was trying to move you along politely.
Oh, okay. Just say, Dale, move on.
You usually do.
It doesn't stop in the past.
No, look, okay, so with Macquarie at the moment, I think it's due for a bit of a pullback, and we're starting to see that this week. So hopefully we get more of an orderly move down. I'd like to see another week down on Macquarie, and then we could see more medium term a move back up. But this should be on your watch list all the time, this stock.
Yeah, it's interesting, isn't it? Because it is actually sort of folding over. And we talk a bit about momentum, etc., and we're looking at this and you're seeing how it's really slowing down compared to what it was in this earlier part. So you're saying coming down probably what, 130, between 130 and 120?
Yeah, look, I think when we see a bit more of the, the corporate world start to move, we start to see a bit more of those mergers, acquisitions, a bit more of the capital movement going on into 2021. This could help Macquarie moving forward. And it hasn't recovered from the COVID low yet. So you'd have to say that with potential coming up over the coming years that this stock should continue to do well. But you're right, the angle of the trend's changed, and I think it's just coming back to what's more normal. Yeah,
I mean, this thing was the best performing stock after the GFC. It just went ballistic for a long time.
But it was one of the heavy fallers.
Yes.
So it declined, more than what you would expect Macquarie to have pulled back. So it quite surprised me. But then you're right, it was like an elastic band, wasn't it, coming up?
If we go back to the GFC, you can see this massive fall on the GFC, then it just went bang, and it was the best performing bank in that 10-year period.
But you just can't take this bank for granted, thinking it's always going to go up. But right now, the trend's moving higher.
All
We
right.
could see a bit of short-term downside, but once it then recovers from that, could be good.
Okay, so that's one of your favourites.
Mm-hmm.
So here's another one of your favourites, NAB. I know you're talking about NAB at the moment.
Look, NAB was a bit of a dirty word like Telstra
It
for a
was.
long time. And if you just show the monthly chart for us, I'm quite kind of liking the fact that I'm telling him what to do at the moment, which is really quite nice.
Yeah.
Thanks
No,
for
you can't.
helping
No,
me
I'm
with
not
the
going to go
charts.
and make you a cup
Normally
of tea.
it's me
okay?
doing this.
Yes, normally it is you. I'm playing second fiddle for a
Okay.
change.
So, looking at the decline we've seen with the COVID low, that pattern, I thought potentially that it might not have finished. But the recent week, over the past sort of month or
This
so,
whole move up, yeah.
it showed that push up has really increased the probability that it's more likely to rise than fall from here. I'd like to see it come back for a few weeks, find support like the other banks, and then we see a kick back up. But I do like this bank at the moment.
This bank's a real big argument for why you wouldn't buy and hold.
Exactly.
I mean, it's a huge argument. I mean, if you bought it somewhere in around the 1990s, you wouldn't be too happy about this other than collecting some dividends.
Well, you talked about this as one of the top 20 stocks that would pull your returns down.
Correct. Yeah.
If you buy and hold.
Yeah, if you buy and hold that, but it is great for shorter term moves. You do pick up some good money quite easily. And with a really good bank. It's not a bad bank, it's a good
But
bank.
you'd have to say though, Dale, your opinion can change about
Yeah,
banks,
absolutely.
about any stock. And given the pattern that's unfolded, if the COVID low was the low,
Yes.
this should be up long term.
Yeah, it should be up long term. Short term pullback, get in probably February, March-ish. We'd probably be looking at it once the pullbacks happen through into February. Now we're going to look at Crest Mining, which is another stock that is interesting, even though it's been going down a bit.
It's not one for the faint-hearted.
No.
It's a trading stock. It's not one that you buy and hold. It's not one that you would buy. If you're looking to buy gold, I wouldn't suggest that you buy this stock. Even though I've said in past recordings that I like to buy the stocks, the gold stocks, this one's really challenging. It's really good if you've got a good set of rules on it. But you can see there after the COVID low, it pushed up and didn't really give you a good set of rules close to the high. It pulled back a long way before you actually got a decent exit. So, that's one of the reasons why it can wipe out a lot of the gains before you actually get a chance to get out of it. So for trading though, I think it's great.
Yeah, it is. And I know a lot of people think, hey, gold, if gold's going up, Crest is going to go up, but it's not necessarily the case. That's really what you're saying.
We talked about that on one of our live shows, how that doesn't always happen.
So if you want to know a bit more about gold and gold stocks, you might go and have a look at those past shows that we did on gold. And we also have some gold experts on our Talking Wealth show for Flicks that we've done. So FLIXX, I've got to keep saying that the right way, FLIXX.net. So our Talking Wealth show there, we've had Joshua Rothbart, who's been our gold expert on that. So if you want to understand gold and how that works, then get onto those ones as well and have a good look at those while you've got some time over the Christmassy, New Year, holiday period. Next one, another one of your absolute favourite stocks, Rio.
Yes, now that looks well improved on what it had been doing over some months, and now we're seeing a bit of a pullback, which is great. I'd be expecting that in the short term to see it come back, and I just think that's a potential opportunity.
Yeah. BHP or Rio, which one's your preferred one?
Look, at the moment, I like Rio at the
You like
moment.
Rio. Yep, so a bit more of a pullback, maybe find some support before moving back up again.
Yep.
Okay, cool. Wow, that was pretty quick of you. Just
Short and sweet on that one.
So definite. I'm not even thinking about this one. It's Rio. So Transurban Group.
Transurban Group has actually pulled back further than I expected. So it actually traded up above $15 a couple of months ago. It was looking quite nice. I thought it was going to push on through the all-time high. But look, it's really done nothing for 6 months. It's gone sideways if you look at that monthly chart. So it's got a lot to prove. And if it takes out that recent low, just above $13 there, where you've pointed to. Yep, you can read my mind. That's really scary, isn't it?
I know, that is scary. And you want to hear what I'm reading. Jeez.
So, if it starts to move up, I would like to see about 3 weeks up on it before we're starting to get some confidence back in the share price, but it could go up just for a week or two and then continue down. So that's the risk.
Bit too early.
A bit too early on this one at the moment.
Yeah.
But it is one of my preferred stocks.
It is one of your preferred stocks. So we just need to pick actually a better direction rather than sideways.
Yeah, big infrastructure type stocks, you've got to have those on your watch list or at least one.
But that is an interesting part of it. And I do get people saying to me, on their YouTube comments and then emails that we do get, they're saying, well, all the stimulus, these infrastructure stocks have really got to go, and they start jumping into them thinking they're going to go. but then this thing hasn't gone.
Yeah, because there's still timing that's important.
And they're not, and that's what people aren't quite getting. It's like, just because the government said it's going to spend money on infrastructure, it's still got to go out and award all the contracts, which can take ages to do.
Yeah.
And
so that's why, the market tries to factor things in 6 months in advance, but with COVID, there was a lot of guesswork going on.
Yeah.
So that's why I think the prices of a lot of shares have been overdone.
Okay, cool. All right, next we have Telstra, my favourite stock to hate in years gone by, or many, many years gone by, but I am liking it a lot better nowadays.
Yeah, we're starting to like the setup that's unfolding on Telstra. There is still a risk to the downside that if it took out that recent low on the monthly chart there, if you just point to that, that one there on the weekly.
The weekly chart, there's the monthly chart, that one.
Yeah, so if it took that low out, then, you just forget about Telstra for many months to come. Into 2021, it might not be until the end of the year that it recovers. But if it holds above that low, we see a nice orderly pullback coming down now.
Here.
And then we see a move back up. That could be quite good for Telstra.
And this would, if it does do that, then this is a long-term play, I'd say, not just a short-term play. So for people, for super funds, that sort of stuff, long-term, more buy and holder people. If it
has to jump a few hurdles though.
Has to jump a few hurdles, but if it does what Janine says, it would be one you would put in your stocking for next Christmas, so to speak, and for that long term. But it does look a little bit better at the moment, although that worries me. That big bar through there in November, it's just took off like a rocket. It's just run out of steam. It just run out of steam.
That's what I mean. Like there was just a lot of money pouring into things, and that wasn't logic.
Wasn't really legit. This is all the COVID vaccine type of news and people jumping in. So now we need to get back to some more normality. Westpac, it's always one of the. If I ever asked you in the last 20 years which of your preferred banks, you say Westpac and Combank. That's what you've always said.
Yeah. Look, these were preferred stocks for both you and I. We like these shares, and I have said that in the past. But right now, I'm not favouring this over NAB, which is interesting.
Why?
Just the formation, the overall formation on the long-term chart, the unfolding of the downside from the all-time high isn't as, I guess, clear as what NAB is. So there's that unfolding with NAB that, is my preferred. And just important levels, they're both trading around important levels. But NAB just shot through more strongly through a really important level, which shows to me more sellers are behind it. So it's always, even when the market shoots ahead in these times, when money's all of a sudden pouring into the market, you look at what outperforms and what underperforms. So the ones that outperform in those times, in theory, there could be more money coming back into those after they have a breather than the other ones. When they settle down, there's more conviction behind them. But, normally the banks tend to go together, and you think algos are trading these things.
Yeah, they are.
So that means that somebody's programmed not to push this as hard as what they've programmed to push other banks. So I'd say that those sort of algorithmic programs may continue along those lines of supporting particular banks more than others.
Okay, so big four banks, we've already talked about last week about CBA. We talked about ANZ last week. Today we've talked about NAB. Now it's the last one, Westpac. So
I'm still saying that if all banks go up, Westpac's going to get the benefit of that as well. But Westpac has had a negative sort of overtone to it, more so than some of the other banks, in my view. So I'd expect that Westpac will still go up with the other banks, but just not as hard as the other banks. So therefore, it's not my preferred pick. But if you had a selection of banks or you had an ETF, you could still expect to do well out of the financial sector.
So the financial sector we're expecting to be good. Westpac probably not as good as the other banks.
At the moment.
Okay, there you go. I mean, Westpac's one. I mean, I have to have sort of an affiliation for Westpac because I worked for Westpac.
Look, once it gets through its long-term trend, downtrend, that angle of that trend, then I think that it could change for Westpac.
Okay, cool. Well, it's all good stuff. And the thing is, a lot of people might jump on something. And generally with the banks, they tend to be more buy and holders. That generally people don't get in and at them because they want the dividend,
but look what's happened. So this is a whole argument that you can't do that anymore.
Yeah, I mean, that's your all-time high on Westpac back there in March, April 2015, like all of the stocks. But so somebody would have been holding this for 5 years and
lost 30 or 40%.
Yeah, well, it's a massive amount they've actually lost if we put that on there. Go from there down to that COVID low, you're talking about 60-odd%, and currently they're still down over nearly 50% on that.
Yeah.
So that's a massive move.
I mean, the masses don't tend to be buying. They're buying into the rise towards the high, right? Often they're buying just... So I was looking at the chart thinking, well, if people bought in there where you've got your cursor now, right before that peak happened, in the months in 2013-14, before, just back a bit further.
Back there, yeah.
Yep. It went up for a couple of months. They would have been thinking to themselves, they've done so well, and all of a sudden the market would have wiped that smile off their face. So, you know, that's why you can't just assume that any stock is going to keep going up. We were saying that all along through those moves on the banks, that, you know, don't treat them as if they're special.
No, and I remember through all this sort of period, people kept saying banks, 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 and we kept saying no, 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 and people kept saying banks, banks, banks.
Yeah, short term.
Short term, yes, but not medium to longer term. And you know, at the end of the day, they've all come off, including, you know, your favourite, which has been Commonwealth Bank. And even Macquarie shows weakness, which is doing right now anyway. So of the banks, Janine's given her opinion, and Janine loves the banks as general. You're normally talking about them a lot. So let's get into the next one, Wesfarmers, which is another one you love.
Yes.
I think the whole top 20 stocks you love.
To me, I think Wesfarmers is like one of the star stocks on our bank. It was, you know, for a long time prior to the GFC, but it lost its shine for quite a few years. So it actually was held back through that 2012, 2018 mark, and then finally took off when people were starting to see some clarity about the direction of where Wesfarmers was going. And then, of course, they got rid of Coles because the big end of town were putting pressure on Wesfarmers to do something. So that's what they ended up doing. But the amount of money that they've got and the ability that they've got to then just go into specific areas that could make them a lot of money down the track. But it's going to be, you know, very strategic moves that Wesfarmers needs to make to get the most out of their capital. So I really hope they do it. They're such a great company. Yeah,
they are very well managed company when I can get it out of my mouth. So they're a very good company.
And look, shareholders will be really happy with them because they've launched Coles and the shareholders have made some good money out of it. Yeah. So, you know, to reward Wesfarmers by buying more stock in Wesfarmers, I think that's probably going to happen, because think about it, your Wesfarmers shares were diluted when you got Coles. Yeah. So you'd be wanting to build up your Wesfarmers holding and your Coles holdings so that you're not holding a tiny piece of Coles that sort of skews the whole portfolio, and your Wesfarmers stock might have also, you know, fallen in value. So it's about rejigging the portfolio. So the big end of town might have been looking at that and thinking, okay, now we need to start piling back into Wesfarmers. Okay, so in the next few months, where do you think it's going to go? Look, I think Wesfarmers will go higher into 2021. Fantastic. There you go. Heard it from Janine. Woolworths, another awesome stock, but a lot different than Wesfarmers and some of the other stocks we're seeing, a little bit more erratic at the moment. Yeah, it's not too... Look, Coles has had a much more even trajectory, but it's not too dissimilar in terms of where it is in its overall position from recent highs. So it's just going sideways at the moment, but I think 2021 will still be a good year for Coles and Woolies over time. Yeah, I mean, I know if you look, just sort of looking at our sort of momentum there, it just keeps hammering up around this momentum, and here it just slowed down. I mean, obviously this is your COVID sort of meltdown into March. It sort of took off a little bit, but nowhere near as good as what Coles did, as you said. And so it's just evening out at the moment. And I agree with you. I think this does look really, really nice. Well, think about this, because, you know, previously, prior to COVID, there was all that talk of the overseas company coming out. I can't even remember their name now. German company, I think it was. Yeah. Corfland or Corfland or something. Yeah, and they were going to come out, but all that was cancelled. And so, you know, at the moment, these companies are sitting where they were prior to all of that coming out, which I think is quite good. So, and they've never been, you know, stellar growth in terms of their results. They're never really stellar, are they? No. In terms of the figures. We're not expecting that out of them. And the market's really saying, okay, these will just plod along, and we're accepting that. How long they will do that for, I don't know, but it's showing that the chart's more likely to go up. Okay, so there you go. So but we always say, though, with a proviso. With a proviso. If Woolworths trades below that recent low. That one there. Yeah, because it's always about the upside. If the stock keeps going, where do we see it rising? And if it falls below a low, where do we see it falling to? So if it goes below that low, there's more downside for the stock. Okay, so if it goes below 36.88 low there, then it's got a lot more downside. And don't think I'll get it cheaper, I'll jump in, because you've just got to wait for that bottom to be confirmed. Yeah. But I think that's less likely if the stock goes up, you know, over the coming weeks. Okay, there we go. So last one, which is Woodside. Let me just bring this up a little bit better. Because the other thing you've got to think about is people are not going away like they were before overseas. So we're not getting overseas travellers. We're getting more people staying at home. They're spending money. They're going to campsites. They've got to go buy their groceries. Where are they going to buy them from? They'll be eating at restaurants, yes. So all of those restaurants actually get the benefit out of the wholesalers as well. Yep. So, it all flows through, doesn't it?
Everything does flow through. I know over the last few weeks, we've been eating out a little bit more, trying to support the local restaurants and everything else. We were supporting coffee shops.
But actually, if everybody did what you did and go on a diet, then I think Coles and Woolies would go broke.
They probably would go broke.
Because you're eating less.
I am eating less, but I'm eating healthier.
Okay.
So I'm trying to help the farmers a lot more than the processors. So, but hey,
That's
health
good.
is first.
The farmers will love you.
Yeah, health is first. That's what we've got to do. So.
Well, we want farmers to do well, don't we, into 2021?
Yeah, and I think
they need a break.
Oh, look, after droughts, fires, floods, you name it.
COVID,
even
that impacted them as well.
So we do need to support our farmers, especially now because of the tariffs on China and everything else. So we do need to be supporting those industries.
I went out and bought some barley, and I'm suggesting that people go out and buy some Australian wines around Christmas time.
Yeah, well, I only ever buy Australian wines or New Zealand wines. They're the only ones I ever buy because it's better. It is better. So, but anyway. Everybody's had their New Year's Eve, so we can't tell them to go and buy lots before New Year's Eve. It's all over by the time they see this. Last stock, Woodside Petroleum. What do we think? Really like it. Yep. Energy sector. It's probably one of the picks that I like this and Oil Search out of the energy sector. Yep. I think there's further upside, short-term potential downside risk while it settles down because like a lot of those stocks, they got a boost over the past month or so. With the COVID announcements, but I think, a bit of a pullback before a further move back up. Okay, like I did last week, out of these 10 stocks, what's your top 3 picks? Okay, I'm not going to stop at 3, but look, you are. I've got Macquarie. A cattle prod now. I like Macquarie, I like NAB, I like Rio, I like Transurban, I like Woodside. That's 5. And I like Wesfarmers. That's 6. I think you're telling everybody just to buy all of them. Is that what you're telling? Just have a watch list with the top 20. Keep it simple. Absolutely. Well, thanks, everybody. I hope you did enjoy our take on the top 20 stocks for 2021. And, we do really appreciate your support on our channel over the past couple of years as Janine and I have been doing these shows. And we look forward to doing a lot more shows into 2021. This is our last recording for 2021, even though you're seeing this early 2021, I think. But we will see you when we come back next week. We'll be refreshed after a little bit of a break. Now, one thing we need to say is that if you haven't, as I've said in previous shows, if you haven't got your goals documented yet, start doing that, or at least put your vision for the next 5 years ahead. For yourself and your families, where would you like to see your lives and that of your families over the next 5 years, but condense that all down into a paragraph if you can, and that's the vision for your life over that time. And then from that, put a big goal down as to what you're going to do with your investing or trading, and then your steps underneath that for how you're going to get there. And we look forward to helping you with that next year. And remember, Janine knows where you live, so she'll come and haunt you if you don't do it. This year and into next year and ongoing. Okay, so that's our take for the top 20 stocks. Take care, everybody. Bye for now. Well, that's a wrap for this show today. I do hope you enjoyed Janine and I's take on the top 20 stocks over the last 2 weeks. I really hope you've enjoyed everybody's questions and our answers to them. Now, the show will be coming back live from next week, so we'll see you back then. For now, I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.